Welcome. Anytime we put house hack in the title of a speech, we get a lot of people to come out. Anytime we put DADU in the title of a speech, we get a lot of people to come out. And then Eric was like, yo, what if we put both of those in the title of a speech? How many people would come out? And here's your answer. Like, a lot of people came out. So thank you for coming. I'm so excited to see a lot of folks in the room. It's a testament to how much cool opportunity there is here in Seattle to build, to design, and to create these structures, DADUs, that really open up opportunities for your family through multi-generational living, for your financial health through either selling them or renting them, and just for our community by creating more housing units in an area that is becoming increasingly unaffordable. I love, love, love new construction and DADUs for that reason. It's one of those rare areas where it feels like we really have a win-win-win across the board, where developers and investors and the communities and homeowners and tenants can all end up on top. So I'm excited about this topic. I'm also excited about the guests that we have here. I have done a few DADUs over the years, as has a lot of the other people that work on my House Hack Seattle team with me, but no one currently touches Eric Yu, our speaker today. He's got 10 units being built right now. He is full on this DADU strategy, specifically in Seattle, but I'm sure that he's looking at some of these other markets as well. And he has boots on the ground building these units to sell. One thing that I've always really admired about Eric is he has a systems mindset. So I know that unlike a lot of investors who run into problems and then say, well, that sucked, and move on, when Eric runs into the problems, I think that he brainstorms solutions in ways that they can't happen again. So I think this speech is going to be very valuable and full of nuggets, because I'm sure Eric has some hard-won experience and has experienced some issues that, rather than just kind of rolling with the punches, he's actually figured out and with his team found ways to mitigate and avoid them in the future. So I think there's going to be a lot of value here, and I'm really excited for this talk. Without further ado, let's welcome up Eric.
Thanks, man. Michael, what if I don't talk about any of that in this talk?
Oh, yeah. You want to throw a curveball?
Yeah, no. We're all good. What's up, everyone? I'm Eric. Like Michael mentioned before, it's been a while since I've been here. So for context, I actually used to be a part of the House Hack Seattle team a couple years ago, but I decided that I was much more interested on the real estate investing side and development side of things. So instead of focusing in on the agent side, I decided to pivot and really go all in on the development things. So for today, I'm going to walk you guys through the good, the bad, and the ugly of DADU development, and really give you a little bit more insight on what the whole process looks like, what you can expect along the way, and some of the things that you might want to think about when you decide to do this for yourself. Cool. Let's we'll talk a bit about me first. So I used to be a software engineer at Facebook before I left in July of 2021. So my wife, Wanda, who's here right now, give her a shout out. We got started into our real estate journey with Airbnb house hacking. So if you were at the last session I talked about the house hacking a while back, you might already know that, but we started with that and now own a mix of Airbnb properties, long-term rentals, and developments. These days I'm mostly focused in on the development side of things, but on occasion here or there, I'll still do a real estate sale and broker work. So here's us back when we were babies, 2020. In our first house hack in Redding, California. I'm just gonna share a little bit here. We lived in this tiny little 252 square foot guest house during COVID. So just imagine remote work, both of us taking meetings. What do? 252 square foot, Eric goes into the bathroom. Like that was my spot for meetings. And then while we did that, we also Airbnb'd out the main house as well. So we were able to put together our first project, the Colorful Haven, which last year we actually sold. So we sold our first project and 1031'd it into another property, which that's not what today's gonna be about, but it's just something I'm kind of proud of from where we started to where we are today. So let's dive into the nitty gritty of what today's gonna be about. So the way I have this talk structured, we're gonna start by going through a case study of the very first DADU that myself and Wanda went through. So I'll give you kind of an end-to-end breakdown of what does that process look like, what are the things that you need to think through, who are the people you need to talk to so that you can be as successful as possible when you decide to take it on yourself. I'm also going to walk you through why DADU development is not for everybody and some of the things that you might run into along the way. It's a doozy sometimes, for sure. And then lastly, I'll talk through some of the ugly, which is some of the painful things that have happened along the way for us, things that you can't really expect and you can't really predict, and you just have to learn how to problem solve and manage. So let's start with the good. This is the very first DADU that we ever built. This is our Jones Avenue DADU that we started and finished back in 2023. So for some property context in the details, this is a property that's in the Ballard Loyal Heights area, pretty nice area, very residential, and we picked it up in November of 2022. Now it's crazy because today, I think buying like a rehab project in that area for $650K seems like such a steal and such a great deal. At the time, this thing was listed at $575, and people were telling us we were nuts to buy it at $650K. Like, some of my other developer buddies now were just like, I like wish I pulled the trigger like you did at that time. But in that moment, I remember both Wanda and myself were feeling a ton of fear, a lot of this like worry of like, oh geez, like what's gonna happen? This is our first big project. Like what if we lose all our money on this? So there's a lot of stress that was involved along the way. Anyway, $650K, this property was a full gut that we had to do. So existing home, we had to take it down to the studs, rebuild it up as a 4-bed, 2-bath, and then the site was a 4,000 square foot lot that we ended up putting this DADU onto. So existing home is here on the left, and then all of the space on the right was the remaining lot that we ended up putting the DADU on. The goal for this project is we'd renovate the main house, we'd get permits on the DADU, we'd build the DADU, and then we'd live in the DADU. I'll get into why I call this advanced house hacking in a moment when we talk about the actual strategy behind why live-in DADUs are so awesome. So, fun fact, who's seen the like Era's DADU on the market? Who has seen like over 100 of these on the market now? Yeah, right? Fun fact, at the time when we decided to do this DADU, we were actually one of the first 10 people to get it permitted. Back in 2023, there was a lot of these DADUs that were 2-bed, 2-bath. Not a lot of them had incorporated garages, but Yen Design decided to come up with this way to kind of hack the code so that they could squeeze in 3 bedrooms with a garage. And it has turned out to be one of the craziest best-selling DADUs I think Seattle has ever seen. And it continues to be that way, like sells well above market for a lot of the other DADUs that we see. So in the next few slides, I'm going to walk through what that process looked like to actually get permits, go through feasibility on this project, how we decided to go about the construction side of things, and then the actual results and numbers on this project. Okay, so step 1 was getting the permits. This is going to go into details, so if anyone wants the slides afterwards, just let me know. I can send these out, or I can share them with Michael and he can get them to you. But step 1, when you are getting into doing a DADU, is really getting all the feasibility done. Now, ideally, you can do all the feasibility before you buy the property, but the way things go with these DADU projects is that if you find something that's very ideal and the lot works out well, you're probably not going to have a chance to do all the feasibility before you try and offer and close on it. So in this case, what we do now is if we can get a feasibility contingency, amazing. If not, we try to be 95% confident when we're looking at a deal to know what we want to see. So for us, we saw that this lot was quite flat. There was no trees on it, and then there was an alley in the back. That makes access pretty easy, and it meant that we would be able to put something on the lot pretty easily. To confirm that, though, you have to get yourself a survey. So you get a surveyor out there, they mock up this site for you and basically let you know what's on there. Once you have the survey, you can talk to your architect, and then they are the ones that can help determine what you can actually build on there or not. So step 1, January 2023, did all this work with the survey, got to talk to our architect, picked up an arborist report, and then there are other steps along the way that you might need to look into when it comes to feasibility. We didn't have to do it on this project, but if you're trying to do something more complicated, you might have to. So step 2, after we had the architect figured out, we actually had the timeline of them figuring out the plan and getting it submitted. So I think one of the things that I was really curious about when I was first getting started is, what does it look like A to B to C to Z, to take this project from start to finish? So a lot of this talk is going to go into like, this part takes a month, this part takes a month, so you know what the expectations look like when you decide to do this for yourself. For the architect side of things, we didn't have any trees. We were able to get the survey over, and they were able to verify that the ARES DADU did fit on our site, which is awesome. The total cost for the architect on this one was $6,325. I don't think Yen Design does it for that cheap anymore. I think as like the first 10, they were still like piloting it out. I think they're closer to like 10K a unit now or something. And yeah, that part went pretty well. Also, quick note, I'm not going to talk much about the acquisition side of things during this call today. So it's not going to be about finding deals. It's more going to be about once you have found the deal, what does it look like after that? So once the architect did their work, it took about 4 weeks for them to put together the entire plan. This is where when you're figuring out your DADU, you really want to figure out what the site layout looks like, where you want to put your walkways, where you want to put your mailboxes, trash cans, a lot of these small details that until you do development for the first time, you don't really think about. Like, someone had to figure out, we want sidewalks on the side here. Someone had to figure out trash cans should go on like the left side of the fence. And these are all the things that we had to talk with our architect about while driving into the permit submission stage. So it took about a month of back and forth for that, but we were officially submitted for plans on March 8th, 2023. The photo on the right side here is, if you're doing development or flips, you're probably pretty familiar with it. It is what the Seattle permit portal looks like. I basically refreshed this page every day until I saw all the green check marks. So yeah, you'll be doing that too. Cool. So after the submissions, it's not like you're going to get the permit right away. The city goes through an extensive review period, and the city needs more resources. The city needs someone who's in tech in here today to write some code to help you auto-review things, because it takes way too long to get your permits through the pipeline.
They need to get back in the office is what they need to do.
Yeah.
Working from home.
That's right.
Actually, just an AI system.
Honestly, yes. I feel like an AI system could take care of Matt. I'm looking at you. So they needed to do one revision. This is like a small, tiny note, but if you remove a parking spot on site that was there before, you have to find a spot to put it, to put another spot back on site. So we had a garage on there before. By removing the garage, we needed to find another space to put a dedicated parking spot. For some reason, they didn't count the garage parking spot, but it was okay because we could squeeze it in here. I just remember though, when that email came in at that time that we needed to find another parking spot, I was freaking out because I was like, oh shoot, if we can't find a parking spot, project's dead, money's gone, like this is gonna be a bust. So it's one of those things where the anxiety of the unknown is gonna pop up a lot, and you just have to keep problem solving and figuring it out as you go. Cool, so start to finish, permits took about 1.5 months for us, which was really fast. As you go through this process, you're gonna have the pre-approved plans, which the city pre-approves. Those are like your schooner 2-bed DADUs that take like 2 weeks to approve. You've got your standard plans like the ARES plan, which is what we did, that can take 4 to 6 weeks, sometimes maybe a little longer, depending on the revisions you get. And then you have your custom plans, which can take, the longest one that we've gone through is like 7, 8 months. So custom can take a lot longer. But yeah, here we go. Permits are issued. So one of the questions I hear a lot from people that are trying to get into this is, how do you actually come up with the money to do this? How do you come up with the money to pay for construction? How do you come up with the money to actually get all the permitting and all the soft costs figured out? I did it a very non-traditional way on the first time around, and I would not recommend. I asked my wife's parents to open a HELOC on their home. And I put a bunch on credit cards, and then we had like maybe like 10 or 20K of cash that we put into it. So it was definitely non-traditional. I kind of want to show you guys this real quick. It's funny. When we were talking to Wanda's parents, obviously it's like in-laws, right? It's like nerve-wracking. So I put together like a full pitch deck on this too, of like, this is why this makes sense. This is what the timeline's going to be. And like, I think they appreciated it. Wanda, you can tell me if that's the case, but yeah, we had to go in like full depth because yes, what is a HELOC? Why HELOC? And here's the cool thing, right? Like, We did find like a really interesting HELOC program that had like an intro rate of 2.99% for 6 months. So we were like, oh, we'll get this project done in 6 months. Easy, like free money, basically. It took more than 6 months. So yeah, that would not recommend. One time only type thing. We ended up spending $390K total on this project. $370K on the build side and then $20K on the soft costs. And then let's talk a little bit more now on the build side of things. So during the permit timeline, and at this point, we have like a pipeline of builders and contractors that we work with. But the first time around, while we were getting permits, we went out and interviewed 10 different builders and we got 4 bids back. I would say if I had to redo that again now, I would literally just come talk to Eric or Michael or someone else who has done this before and just get referrals instead. I think word of mouth and like hearing about people's experiences is definitely the best way to find great people to work with. I think I went on Google and I looked up who builds DADUs and we found like 10 people on Thumbtack or something like that. So word of mouth is huge. Couple caveats, like one of the builders sent us this bid. For people back there, I don't think you can see at all, but it says DADU 300K. There's no detail, right? And so if anything comes up as a miscommunication, if anything comes up as like, oh, your tiles are too expensive, oh, your flooring's too expensive, what do you do, right? There's nothing that's outlined and set in stone, and it was unclear what we had to provide to the builder to make that happen. This is an example of a bid that is a bit better. So this one had a line-by-line breakdown of every different trade, every different item that we would need to think about. And it gave us allowances like $8 a square foot for tile, $4 a square foot for flooring. So we knew that if there's anything that's over budget, that could be on us. Like if we pick a tile that's $10 a square foot, that's on us. There's no surprises there. If we pick a tile that's $6 a square foot, we save $2 a square foot. Also no surprises there. This was a cost plus contract that we did. So basically, whatever the cost that the builder spent would be the cost that we spend plus whatever fee he has. So any savings on the construction side of things would be passed on to us. His whole thing is just getting the fee along the way. There's a couple different ways you can structure contracts with your builders. I'm not going to go into that right now, but we've tried multiple options, and I think either cost plus or a guaranteed price contract has been what works for us the best.
Let's drop the footprint.
I'm not following what?
The Iran thing, the
Oh, yeah.
tariffs thing, the
Yeah. That definitely messes everything up along the way.
Panama thing.
Yeah, there's a lot there. Cool, so let's talk about when we got into the spot of actually starting to do the build. This is on May 9th, 2023. I'm standing here with a shovel, pretending to be excavating when there's clearly an excavator right behind me, but... Oh, sorry, Wanda has the shovel. Wanda was the one that excavated all of it with the shovel. So we officially broke ground on May 9th. For context, this is about 4 months after we started the entire process. So from start to finish of doing the feasibility and getting the permits on this project, it took about 4 months. Usually I estimate about 9 months for the custom side of things, but if you go standard or if you go pre-approved, it can be a lot quicker. I'm not going to go in depth on all of these, so these slides will be shared out afterwards where you can review, but I put a line-by-line breakdown of like dates for when each trade happened and when things actually got completed. This is also something, as someone who cares a lot about systems, I wanted to know and I wanted to get info from other people on from the beginning, but it was really hard to get, for some reason, it was very hard for me to like get contractors to just share their timelines. Probably because they just didn't, probably because they didn't even have their timelines tracked, but for me, every project that I do now, we keep a list of every single line item, where things were slow, where things were quick, maybe plumbing got blocked, maybe the electrical didn't show up, just so we have a good sense of how long everything takes along the way. In this case, the first month was really for all of the groundwork. So we took care of demo, we did a lot of the running of like water lines, sewer lines, and then we did a lot of the foundation work that you can see here on the right. That was the first month. Second month was a lot of the framing side of things and rough-ins. Yeah, you know, I'm gonna skip the construction timeline. You guys can review on these slides later. Ooh, okay, good learning. So first time through, I don't know. It's like design finishes don't feel important until you need them, and you have to pick them in like the last like hour before they get installed. And so now I have this learning of just get your design finishes done before the project starts. At the time, we're already in like August for context. So let's see. August was, flooring was done in August and coat paint had already started. So we started picking finishes like at the same time that we were doing finishes. That's not the best way to do it. So highly, highly recommend if you're doing one of these kinds of projects, get your finishes done early. It feels like something you can procrastinate on, but that's one of the things that ends up being a timeline killer. So for us, we got this finishes spreadsheet done. Myself and Wanda, after 3 all-nighters on a weekend, were able to pick it all out. And it's also one of those things that I realized, delegation is key. So we actually have a designer that does all of these for us now. So cool, let's talk about final results. The purchase price of the land on which the DADU is, I guess, is technically $0, but you should split whatever the land value was before with the main house into the DADU. The total cost for us to build was $390K, and we got a absurdly high appraisal value of $925K. Thank you. So the equity that we built into this house was $535K minus the land value split that we had. I don't think it's worth $925K, but if the bank is gonna tell me that it is, that's amazing. We ended up paying down the HELOC and credit cards by liquidating a bunch of our stocks, cash, and whatnot. So the reason why we didn't do that at first is because it's kind of like nerve-wracking to think about liquidating all your investments. But once the project's actually done, we decided to pay it all off in cash. And let me tell you why that's the case. And this is where advanced hacking comes into play. So what's awesome about assets is how you can leverage debt against them. And when we had our fully paid off house, the way that I was thinking about it is I want to have access to capital to redeploy into projects when projects come up. And that doesn't mean I want to have the cash in hand right away, right? Like I don't necessarily need $500,000 in the bank at any time, but it is nice to be able to tap into that $500,000 at any time. So I hear people talk about doing like cash out refinances or getting like home equity loans instead. I'm a big proponent of HELOCs just because you have the flexibility of choosing when you take on that debt and choosing when you actually have to pay interest. So for HELOCs, there's some really nice options out there. You can go up to like 80% LTV for your high balances in my case. And for anyone else who doesn't have a W-2 anymore, East West Bank has a super cool program that is a purely asset-based HELOC. They only go up to 50 LTV. So that's where the having full free and clear paid off was really important, where most of the time you're going to have more than 50% of your property on a loan. But in this case, because we had the DADU fully paid off, we were able to take 50% of the value onto a HELOC. So what this means is now we have this basically line of credit option to finance things for the next 10 years. And anytime we need to draw funds to pick up a new project, I'll tap into the HELOC. Once we're done with the project, I'll pay the HELOC down. And it's kind of this like safety net of funds that I have to rinse and repeat. Okay, this is also super important. I'm not a CPA, not a tax advisor, but this is something I feel like a lot of people miss and a lot of people don't actually talk about, which is you have to remember to update your cost basis after you build your DADU. I'm gonna say it again. You have to remember to update your cost basis after you sell your DADU. So what does that mean?
You build?
Sorry, not sell. After you build your DADU and you want to track it. So I'm going to go through an example real quick on why this is important and how you can get yourself stuck with a huge tax liability that you're unaware of, and how it can like be the difference between you paying no taxes and like an extra 100K, 200K of taxes. Basically, when we bought this house, it was 650K, right? 650K house, let's say we split the building and land value, where building is like 150K value, land value is 500K value, okay? Just hypothetically. We put on $200,000 into the existing home renovation. So at this point, you add all three together, that's what your cost basis is. You have $850K as your cost basis. Now, after you build your DADU, I'm sure most of you know that if you want to sell the DADU separate from the existing home, you have to condo the lot. When you condo the lot and you create condo lots, you need to split the land value between the two condo lots. How you decide to do this, you should talk to a CPA about. Some people argue that it's just based on the square foot splits on the lot itself. Other people try to argue it's like based on the square foot differences between the unit sizes. Talk to your CPA about that. But basically, after condoing, let's say we split the land value in half. Now, all of a sudden, the existing home cost basis is $250K plus $150K plus $200K, which is $600K, okay? So previously, cost basis, $850K. After condo, cost basis, $600K. If I sell that existing home for $850,000, which was what the previous cost basis is, that is a $250K taxable gain, okay? So if you're going to be selling, you have to be very clear on what your cost basis looks like. I think there's people out there that are like, oh, you know, like I bought this home, I renovated it, I put $850K into it, I sell it for $850K, no tax, I'm good. That's not the case. After you condo the lot, you have to make sure you manage your cost basis correctly. So this is something that's super important to talk to your CPA about. I just know that like folks will sell one of the homes and think that they're totally fine, later to find out like next year, they're in for a huge tax liability. So yeah, one tidbit there. All right, and then this is my favorite part of the whole process. It is section 131. Raise your hand if you know what that is. Okay. I figured you'd know, Michael. Oh no, you're joking. Section 121, who knows what that is? Ah, okay, more people. Oh shoot, that's embarrassing. So we we lived in the DADU for 2 years, so we could utilize section 121 to minimize our tax burden. So what it means is basically if you live in a primary for 2 out of the past 5 years, as a single person, you can exclude up to $250K of gains. As a married couple, you can exclude up to $500K of gains. As mentioned earlier on this project, we ended up having equity built of $535K minus land value. With the section 121 exclusion, when we sell this primary, that means that we can get the gains from this build completely tax-free. Now, what's so powerful about that is, previously, if I had to pay like a $500K tax bill, that's a $200K difference right there in terms of taxes. So you end up having an extra $200K from taxes you save an extra $200K from taxes just by living there. And that means it's more cash in pocket to reinvest in other stuff or just save for a rainy day. So as it stands now, we have 3 years to decide when to sell the DADU. It's not gonna be this year, but maybe next year. Okay, so that was our very first project. Actually, I'll take some questions here before we move on to some of the next things. Okay, so the question was, when you're doing your cost basis, why don't you just put all the land value in the front house? And I have tried to argue that exact point with my CPA of like, there's no land value in the backyard. Like, who wants to put land value in the backyard? CPA basically just said, if the IRS audits you and you can't come up with like reasonable land value splits, then they could make you just like, go back and like pay the taxes for that year and get penalized for it. That said, it is like kind of a gray hand wavy area. So that's why you should talk to your CPA to figure out the best way you want to do the splits. It could be based on land. I actually talked to ChatGPT about this because I wasn't happy with my CPA's answer. And ChatGPT said, your land in the backyard is less prime than your land in the front yard. And it argued for me that I should get like a 20% value depreciation on the back. My CPA was not impressed, of course, but it's possible, right? Like you just need to figure out a reasonable way to split.
I'm curious how you think about the DADU universe, like the pre-built ones versus the custom in terms of demand. Like, can you charge higher rents? Can you get higher resale if you go custom?
Yeah. One of my partners, Rachel, over there, and I had a long discussion about this on a project where we ended up going with a standard plan. And both of us agree that I think we should have gone custom on that one. I'll talk about it in some of the bad slides, but a whole bunch of things went wrong where the standard plan ended up taking as long, if not longer, than a custom plan permit timeline. But in general, what I'll say is I have seen custom plans do better. But in terms of like your time savings of going just like a standard ARES one, it might not be worth it to invest in the custom because you can just like in and out, move really quick on the standard ones. Okay, let's keep going. Let me do a time check, make sure I'm not talking your ears off. Oh, we're good, only 40 minutes. Okay, the bad, where things can go wrong. So like Michael said, this is the part that's gonna tie more into what Michael was talking about at the beginning, where I'm a very like systems driven, like, okay, if something happens one time, we mess up one time, how do we fix it on the next go around so that we can be better, we can keep improving as a team, and our execution just gets more seamless. So there are a number of risks that come up in the development space. I think the first one that I always think of is timeline risk. So I've seen projects like our fastest project take 5 months. I've seen our slowest project take 18 months, and we're now normally somewhere in the middle. It's not like a single big factor that causes your timeline to slip the most. It's a lot of tiny actions that compound over time a lot. So what I mean by that is you miss one email follow-up for a week. That person's not working for a week, which blocks the next person from working for a week, and it just kind of compounds itself over time. One of our most painful ones that ever happened was there was an energy code revision back in 2024. Yeah, 2024, October, I think it was October 15th, 2024. Don't quote me on that. The energy code revision happened, and all of a sudden what was a standard plan before is no longer a standard plan now. Our architect missed that submission date by 1 day. So what ended up being something that would have probably taken a day took us 6 weeks because the architect needed to redo and recalculate everything based on the new energy code, which was absurd. All due to missed follow-ups and missed pushing of urgency on the architect. So that's one example. Another example is permit reviewers are not always the fastest. I'll tell you how we solve for that later, but basically send a lot of follow-ups and eventually you'll get your projects approved. The next thing that comes up a lot is financing risk. So if you do the 2.99% HELOC credit card kind of approach, maybe it's not as big of a risk. But if you do the more standard hard money approach for construction, you're taking on debt at a 10 to 12% rate. And that's fine, you know, run your numbers well. This hard money is amazing. Go talk to Israel. He is someone who can really help you out there and help you with construction financing. You've got 10 to 12% rates, and then you have a 12-month balloon. So if you don't execute your project well enough, you're going to be on the hook for a lot of debt and for a lot of interest. Yeah, the longer your projects take, the more money you burn. And so when you're calculating out your pro formas, be conservative, because if your project is no longer profitable because you take an extra 3 months, then that project is probably not good in the first place. You got to build in your buffer and understand that, like, hey, things happen, shit's going to break, and no matter how well you try to manage timeline, there are going to be slips. So a big part of it is buying right and making sure you know your numbers before you get into it. Okay, number 3 is very relevant for us today, and that's market risk. Yeah, I mean, with all the tech layoffs, with the conflict with Iran and everything else, we are definitely seeing a market softening. I don't know if you guys saw this post a couple days ago, but there are 8,630 homes for sale in Seattle. In a normal April, there are 4,600. The layoffs came first. We're definitely in a very interesting market right now. I think on the sell side, things are a lot slower, but I just remind myself and try to remind everyone else that the market is not within your control, right? Like, you control all the variables that you can along the way, and what happens with the market is what's going to happen with the market. Like, very much so today, I could be talking about how rates are at like 4%, market's booming, would be great. But instead, we're on the other side right now. And I think the most important thing to take away from this is there's going to be times you win, there's going to be times you lose. Just staying in the game, I think, is the most important thing. Okay. And then here's the last risk, which is contractor risk. So the people that you work with are going to either make you sleep soundly at night or make you pull out all of your hair. So what happens when your contractor ghosts you? I actually still don't know. Like, I don't know. I just like, it's very hard to get them back. This is, again, one of those things where what you control is how much upfront talking you do with other people that have been doing this, how much you understand other people's experiences working with contractors. What you don't control is what happens with their execution once the project starts. Like, no matter how much pushing and follow-ups and what I can try to do to make things happen, there's only so much I can do when I'm kind of at the whim of the contractor. So most important thing here is once you know you're going to get your project going, you got to find the right people to work with. So like things that come up, like you saw the bids earlier, if your contractor is off on his estimates by 50K, or if your contractor is off on his timeline by 3 months, even though you can try to fight that, at the end of the day, you're going to be the one that's taking the most hit from it. Okay, so let's talk about what I'm currently doing these days to mitigate these risks. On the sequencing side of things, this works for me now because we're working at volume, but I have a full-time lead that manages all the entitlement and construction side of things. So it's really funny. We have like a team emoji. It's called Donna to the rescue. So Donna is our superstar Philippines follow-up machine who is like ruthless. Like I'm talking like she will call you, she will text you, she will like email you until you get your permit review done. I honestly think that some of the permit reviewers are just like, okay, it is easier for me to go through this review than it is for me to see Donna in my inbox 40 times. We don't actually do that many follow-ups, but she's basically the person that's in charge and responsible of making sure that we're moving along every stage. This is one of those things that was very time-consuming and like very just like, I feel like one of those things that you don't want to think about of like how you already have so much on your plate. Now you also have to think about follow-ups. How can you offload that? That's where we hired in people to help on that. And if anyone's curious about the process of hiring a remote team, just let me know. It's been a journey to like learn how to find good people that will stay and retain. And yeah, I feel like I could do another presentation on that.
She's in the Philippines?
She is, yes. Yeah. The second thing is around financing risk. So this is something that we pivoted to for last year where with like that first DADU project, Juan and I fronted all the cash and the capital that we had to put into it on the purchase. These days, we have changed that model into my team brings 0% of the cash in, an investor is going to bring 100% of the cash in. We're going to do a 50-50 split of profits at the end, and then I'm also going to keep the 3% listing commission. So, oh, and on top of that, they pay us a $60K management fee to run the project from start to finish. So it doesn't eliminate the risk completely, but it shifts the risk onto someone else who is willing to take it. So previously, I would be taking on all the capital risk. I'm also taking on all the reward. Now I'm taking on none of the capital risk, and I'm sharing the reward with someone who is willing to take on that risk. This makes it a lot easier to scale. This makes it a lot easier for me to not be as stressed about money. And this makes it so that we can create win-win scenarios across both sides. So my worst case scenario, if the project doesn't turn out well, is we would still get the $60K management fee, and then we would still get 3% from the final sale prices. I would say for like the very first project, it's going to be hard to get an investor on with these kinds of terms. But once you've done it once, once you've done it twice, or you've done it for yourself, you can definitely find people out there who have capital and want to deploy with you. For the market risk, I mean, you just got to deal with it. There's no solution in my mind for that one. It's more of just a balance your emotions and recognize sometimes you win, sometimes you lose. And then last thing on the contractor risk side of things. So there are so many great contractors probably in this room right now. And I think for us, what we started to do across projects is work with different contractors. So we don't have all of our eggs in one basket. But I would say in this room, there's, I don't know if David Weisser is here anymore, but he is the owner of the Backyard ADU. And he's someone that you could definitely reach out to help on your own build as well. Okay. That is the walkthrough of some of the risks that might come along the way as you're getting into real estate development. Last thing, I think these are more going to be just like funny stories of the ugly of when you want to quit developing. So we had a property that we bought in 2024, and we were like, oh, you know, easy. We'll have some tenants for a year until we get permits, and once we get permits, we'll start building. Well, turns out those tenants didn't want to leave anymore, and they stopped paying rent. The problem with this is not even like the squatter side of things. The problem is my mistake in not including a clause in the lease that said I could build even while they were living there. The lease that I had allowed them to have full control of the property, including the land. Now we always have a clause that says, hey, even if they're still in there, we can start doing the build. So this was really painful because they stopped paying for about 5 months, and I went through the evictions process for the first time, and King County is not the most friendly to landlords, that's for sure. But we were able to eventually get them out of the property and get the development started. But it's painful, you know? Every month is $8K, $9K of carrying costs. Over 5 months, it ends up being almost $50K.
And not being able to build.
Yes, and not being able to build. But now we have a team that's trying to crank it out in 5 or 6 months. I see Oli. Number 2, the neighbor risk. Okay, so I'm sure you know that not everyone is the biggest fan of development. It's awesome because we're creating density and we are able to help create more housing for folks, but not everyone likes construction happening next doors. One of the neighbors who also used ChatGPT said, we raised her water table and corroded her foundation, risking complete structural collapse of her home. I don't, there was no basis in that. And after we sent someone over to look, there was like a little puddle of water in their basement. And so I think it was after like heavy rains, there was some water that came through, but I don't think it had anything to do with us. And so this neighbor continues to bring new complaints all the time. And the best we can do is respond amicably and just move on. Another neighbor did complain about the location of a structure as well. And with this neighbor, we decided to play nice, and we ended up moving the structure as an act of goodwill. So sometimes ignore, sometimes act, just kind of depends on the situation. There's also risk of arson. So here's a Blink camera that we once had that got burned down because someone decided to burn down the porta potty outside our property. I'm just grateful that they didn't burn down the house. I heard that, I think it was Jared Holmes, who had like their whole DADU burned down by an arsonist a couple months ago. So this is the kind of thing that can happen, you know? And I remember after this happened, I had stress thinking, dude, that arsonist is gonna come back. Like there's no, bro is gonna come back, bro's gonna burn down the house. So we added like 4 extra Blink cameras, and I added these extra alerts to get notifications every time so we could catch them immediately. And
Sorry, there is insurance though that we
Yes. Great call out. Oli was mentioning that if this happens, you do have insurance on your build policy, so you can get all this covered. The money aspect should be fine, but the emotional toll that something like this takes is always not fun. So fortunately for me, we haven't had a structure burn down just yet, but we have had a porta potty go. And then the last thing I want to say, and I think honestly this is the thing that is probably the most tricky part about real estate as a whole, which is just dealing and managing the emotions that come up along the way. So as I was thinking about this and talking about this, the loss of money or the kicking out and evicting a tenant, all of that is not, the situation itself is not really the painful thing, right? If we end up losing 50K on the deal, the painful thing is what I'm telling myself happened about that project. I'm telling myself that, oh, I didn't do a good enough job analyzing the deal, or, oh, I didn't do a good enough job on execution. And all those thoughts start swirling. And I think that's also the thing, that kind of anxiety or that fear that pops up that kind of gets in your way of actually starting a project. When you hear about all these bad things happening, it's really easy to psych yourself out. And so I have to constantly remind myself, this journey of the times where we have really great moments, we have really great exits, awesome. They're just the same as the really bad times where we have really terrible exits. The high, the low, they're all the same. And what I try to remind myself is, how do I stay even keeled through all of that? So for example, in this market right now, I know there's developers and flippers that are hurting because their inventory is stuck. I'm also hurting because we have some inventory stuck as well. But at the end of the day, it's okay, like we play this game to sometimes win, to sometimes lose. I did my best to lower my probability of losing, but that doesn't mean I'm guaranteed to win 100% of the time. The reason why I do all of the risk mitigation, the reason why I do all the investor financing and all of that is to give myself the best chance possible, but I could still lose, and that's okay. All right, last part of the slides, what's next? So we are officially gonna be moving out of our DADU. We've been there for 2+ years now, so it's time to put all of that talk stuff into practice. The next house that we're moving into is gonna be this one down here. It's gonna be a 4-bed, 3.5 bath house with 2,000 square feet. So this one's actually a SFR that has one of those ADUs attached to it. So it's not a standalone DADU. It's one of those like more connected townhome-esque projects. And based on the math, one thing that we could do is sell the DADU, cap gains free, and move that capital over to the new house. So we own that one free and clear and get a HELOC on that one. But market's not the best right now, so we'll most likely hold on to it as a rental. In terms of our current pipeline, we have a couple things on market right now. We've got 5 projects coming up later this year, early next year. And then we have our biggest project yet on 86th Street in Greenwood. That'll be our first teardown and 4-unit project. All right, last slide. So as you've heard all that, there's some of you that are like, yeah, let's go. I'm gonna do this tomorrow. There's others of you that are like, oh, geez, like this is kind of a harder process than I thought. For those of you in the latter camp, if you don't want to invest yourself and take on a project yourself, I'm always looking for investors as well. And I'm looking for folks who might be interested in just working with an experienced developer in this space. So if that's you, come reach out and talk to me. Generally, we're looking for people who have around 300 to 350K to deploy. So it's not a small amount, but if it is something that you want to talk about more after this, I will be around and available. All right, that's all. Thanks, guys. Yeah.
Did you end up building the same house again?
The question is, did you end up building the same house again? The answer is I have built that same DADU again.
Did you use
twice?
The contractor?
Do we use the same contractor? On one of them, yes. On one of them, no. So at this point, we've worked with 5 or 6 different people, and
Save money the second time you use the same contractor?
I did. So the second time building it was cheaper, and we are getting better and better at like cost control and getting better bids. So I'd say when we first started, we were building closer to like $350 a square foot. I think at this point, we're building closer to like $275, $280 a square foot. Wait, guys, do you want to see what the new one's going to look like? Okay. Oh, so in terms of systems, I'm also a huge proponent of Slack. So we have everything built out in our Slack in different channels. But here's a video of the new one that's coming soon. We have these fun exposed beams at the top. We just got the waterfall countertops in this week, actually.
Today I'm going to check all of the...
This is Logan. Logan is our on-site build manager, who I don't know if he's here right now. Oh, there he is. Say hi to Logan. Hi, Logan. Yeah, so Logan's been awesome helping us out here. We did oh no, going away. We did a fun stair detail here. So we put under stair LED lights. And then there's something cool where you step on the first step and it goes do 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 all the way up. One of my friends. One of my friends was just like, dude, imagine you like leave a glass of water downstairs and you just like keep going up and down, and the lights just keep going up and down too. So that's gonna be the inside, and then the outside of this one is gonna look like this, pretty close to the rendering. I'm pretty pumped for this one because we're gonna have good yard space as well. So we have a little bit of a front yard here, and then we have like a 1,500 square foot or so backyard as well. So yeah, all right, let's take some more questions.
Can you go in depth for the story when you need to move the structure because of the neighbors complaint?
Oh, okay, sure. So that was actually on this project. Okay, so Fortunately, it wasn't the actual units themselves. We built an extra detached garage on site as well. And there was like a very nuanced part of the code that said, if your garage is within like so many feet of an alley, then you do not need to build away from the lot line at all. And so we could build the garage exactly abutted against the lot line of the neighbor. Usually you need to have like a 5 feet setback. So the neighbor kept trying to argue that, and I get it, you know, because it was such a small section of the code that our architect used that it feels almost like we're cheating. So we kind of met them in the middle and we shifted the garage over like 2.5 or 3 feet instead. It didn't really impact timelines or anything at all. All we had to do was get a grounds inspector over, and at that time we hadn't poured the foundation yet. So it was okay. Grounds inspector came over, he approved us moving it over like 3 feet and we were good to go. If it had cost us more time and if we had needed to get a post-permit revision, we probably would have pushed back more. But in this case, it was like a pretty innocuous change that maybe took like a week or two to get approval on.
Did they have any leverage against yours?
No leverage, except for the fact that they could be a pain in the ass for the rest of the project.
Wow. Can you explain what does it mean to be PITA? Like, what would they do to you?
They can file tons of complaints to the city. They can like keep calling you. They can like yell at your contractors when they're on site. It's like, it's okay. So one of my like philosophies is also like, I want to work with people that don't stress me out. And so even if a contractor is way cheaper than another one, but it's going to lead to a lot of stress for me, I'd rather work with someone that's a little bit more pricey so I don't have as much stress. This was kind of the same scenario where the cost of us moving it, maybe a week or two, the benefit is neighbor realizes that we're amenable, that we're actually like nice people. We're not just like trying to take advantage of the land. And we haven't heard from them since.
But usually the neighbor cannot stop your construction, even if they're gonna file a complaint and try to.
They can't, but they can like try to take me to court. They can try, like they can do all of these things to like make my life a headache, even though they're not gonna win at the end. It's just like, on top of all the other things going on, do I wanna have one more kind of annoying neighbor to deal with? Yeah.
What are you, on the acquisition side, what are you doing to find these deals? Are you looking on market or off market?
A mix. So the question was, where are you finding these deals? Are you finding them on market? Are you finding them off market? We're probably 50-50 at this point. On like 50% of the deals have been on, 50 have been off. For on-market stuff, I have a team member who's constantly looking at stuff that comes on Zillow and like running the deals and giving us like properties to review. For the off-market stuff, we just have a network of wholesalers that we're talking to at all times and evaluating. At some point, I wanted to consider building my own off-market team of like, oh, like I will cold call, I will go door knock, or I'll hire someone to do that. But it's a lot of work to do off-market hunting. And so I have a lot of respect to the wholesalers that do it and are successful at it, and I'm more than happy to pay them their fee.
The homes that are not selling right now, what are rents going on? Problematic neighbors? Is it the wrong neighborhoods?
Yeah.
Economy.
Yeah.
Economy.
The question was, for the homes that I have that aren't selling right now, like what's happening? I think it's a mix of things. One is we probably priced a little too high at the beginning. So on weekend one, we should have had a buyer on something, but I think we might have been priced like $30K too high. And so they moved on to a different one. So that was a bummer.
Do you have
I'd say
agents coming through and touring?
we still get showing activity. So it's not at a point where we don't get any showings at all. So I'm still like, okay, I think things will happen, but economy is a big part of it. I think one of the properties' location is not as good either. And so that has like reinforced my thoughts of, okay, the things that we've bought in good places, like the Ballard one that I was talking about before, they're gonna be fine no matter what. The things where the numbers made sense, but were in slightly less desirable places, those are the ones that are hurting the most, because now that you've got less buyers more spooked, they have a lot more picking power.
Inventory.
Yeah, exactly. And so as our backup plan, we can refinance and turn them into rentals if we have to. But that is definitely not my preference. Oh, how do I defer the taxes, you're saying? Okay, so Let's go back to that slide about section 120. Okay. Ooh, a whole other side of our business I can talk about. So I spent time talking about the development side of things, but I haven't spent time talking about the Airbnb side and why we pick up Airbnbs. But if you were at the last tax professional talk, they probably talked about the bonus depreciation and short-term rental loophole. For us, what we do is we have our portfolio split into two prongs. Prong number one is the development side of things. I view this as the capital stacking kind of play. Prong number two is the short-term rental side of things. These are our long-term holds, and these are the things that bring us consistent cash flow over time. So with the development plays, you're right. We're going to have that 30% tax hit. So if we profit 200K, there's 60K that goes down the drain. But if that 200K profit gets deployed into, say, 600K, 700K Airbnb, I do the bonus depreciation and cost seg, I offset all of those gains and I trade it for an Airbnb that ends up giving me cash flow year over year. So we do a mix of both of these strategies so that we minimize our tax burden as much as possible. That was a gold nugget, guys. I feel good about that one. The question is, do you have a calculator? We do. We do have a spreadsheet that we use to estimate things and figure out numbers. To be honest, these days with all the AI tools out there, they can work just as well in helping you analyze things or helping you put together the calculator. But I would just recommend looking up DADU development pro forma or talking. I'm sure Michael and House Hack Seattle have one.
You mentioned you're into systems, and I saw some Google calendars, saw Slack. What's your most basic system that you just live by?
Okay. Question is, what is my most basic system that I live by? So it's a recent development for me that I learned that I have ADHD and I forget a lot of things. And I have been starting to, Wanda knows this very well. I've been starting to do a better job, I think, of just typing things into Notion. So Notion is where I store all of my information. And I just have a bulleted checklist where I write things in.
You said to follow up doing when the architecture submits the permit, how do you manage follow-up?
The cadence that we have typically for follow-ups is if we're not getting a response within, I want to say it's 3 days right now. If we're not getting a response within 3 days, we will check in. And one of the things that we've been doing a better job of is anytime we're working with someone, we need to be very clear on giving them a delivery date. So as we talk with our architect, some of them might not be very responsive during the back and forth working process. But if you align in your meeting, hey, I need this on the 15th, and they agree with that, there's some people that we work with that just always meet that dot and they always meet that timeline. So we don't really need to hound them and follow up. It's the people that have consistently not met those timelines that we feel we have to keep the follow-ups going.
The question is when you said you structure the deal, the payout GC something plus, what is it called?
Cost plus. Yeah. So it's the hard cost of building it plus whatever GC fee there is. So GC fee could be something like a standard 20% of whatever the cost is. So if it costs 300K, the GC might get 60K as a fee. Some people do basically, just a markup percentage. Sometimes there's GCs that just do a fixed fee instead. So instead of 20%, they could just say every project's going to be 50K or something.
Yeah, you mentioned the second strategy, the cost plus, and then there's another strategy.
I was talking about a guaranteed max price or fixed price contract. So that one is interesting because, okay, so guaranteed max price, we ended up not doing, but we did do fixed pricing where basically GC says this is the price it'll be, and that's the price it'll be. Any savings that they get will go to the GC instead. Any cost overages will also go to the GC. So the GC takes on the risk of fluctuation, but the benefit for me is I know from the get-go, this is it. And of course, there might be change orders. There might be things where I'm oh, I want to build this super cool movie theater inside that they don't originally scope for. That cost would come to me. But everything in the original scope, if things change in that cost, Either up or down, the GC will bear the burden.
Yeah, so when you're acquiring properties, I know one of your earlier ones you mentioned you did a renovation from main house to and build DADU. Do you ever acquire properties that the main house is basically like good as is and then you just buy the land basically? Or are you always more often looking for like a semi-distressed main house with also like DADU?
Question was, when I'm looking at deals, do I look at homes that are like turnkey already that have land, or do I normally look for like distressed homes that need some rehab that come with land? Short answer is most of the time we're looking for the distressed home options. And the reason for that is when you do that condo lot split, you're gonna lose value on the main home for cutting out some of the land. And so by finding a distressed home, you can, not always, but like you can build in extra value to try and offset whatever the loss would be from the condo split. So for example, like one of the units that we have currently listed, it's that exact scenario where because we were able to renovate it, we don't really lose that much money selling it versus if it was turnkey, we would almost for sure lose like 100K, 150K evaluation. Okay, the question is, with your DADUs, do you want to do long-term rentals or short-term rentals on them? It depends. Oh gosh, I hate saying that. It depends on what your goal is. So with the short-term rental approach, you can obviously take advantage of what I was saying with like some of those like extra depreciation and like loopholes, which is nice to like offset your income. But I'm personally not a huge fan of Airbnb in Seattle. So I think valuations of homes are too high for the revenue that you can get here versus some of the other markets that we're in, like the Poconos I was talking about earlier. Like that home is $500,000 for like 2,800 square feet. For here to have like a similar home, you're talking like 2 mil plus, and the rental income is just not going to justify it. I would only do the Airbnb approach on the DADU for the tax benefit. Otherwise, I would probably go long-term rental. Question was like, how important is it to have an understanding of like construction before you get into your first project? It's important if you don't want to be stressed. I would say like the first time around was definitely the most stressful for me because it's just all new knowledge at all times. And there's like so much anxiety around like, oh, was like this foundation poured correctly? Oh, it was raining when the foundation was poured. Is that going to be okay? Oh, I noticed like this nail is protruding through the roof. Like a lot of those, like I was probably kind of an annoying client the first go around, just asking questions and trying to understand everything. And there's still like, it's endless. There's always more things to learn. I would recommend trying to like follow along someone who's like currently doing it just so you can get a little bit more insight. So that's why like on our team, we invited people in who were like curious to learn more about development, and they could get the education and the learning with me without having to put up their own capital. And then it was easy for them to do their own project afterward. That's what I would recommend for myself in the past, but you know, I still figured it out. Cool, I'm gonna pass it back to Michael now.